The case for Bitcoin is it's scarce, desirable property. It's not a currency derivative. It's not a security. It's beyond the reach of a company, a nation state, an agency. You can hold it and you can give it to your children or your children's children. You can take custody of it and you don't have to trust a counterparty. And I think we can see, especially this month, the risk of counterparties is great. If you hold gold in a vault and you're Russia, your gold can be seized. If you have cash in a bank account in Argentina this week, your cash is locked up. Bitcoin is desirable because it's portable, it's global, it's scarce. And I can't think of anything better. I think we're living in a very uncertain world right now, and there's a lot of political uncertainty with regard to politics, trade policy, labor policy, manufacturing policy. So if you're considering investing in a company, the question you have to struggle with is, will the company be impacted by tariffs or trade policy or tax policy or labor policy or manufacturing policy or a war or a famine? And so that's the first uncertainty. The second uncertainty we have today is monetary uncertainty. We see a lot of countries with their currencies collapsing. So there's a risk with currencies. There's the obvious risk with bonds. There's a risk with stocks. That takes you to property and collectibles. So maybe you collect Rolexes. A lot of people are doing that. A lot of people, you can see what people are doing in this macroeconomic environment. They're buying watches. They're buying luxury cars. They're buying real estate. If you look over the past 2 years, the money supply expanded by 40%. Single family homes in the US increased in price by 40%. So it looks in the near term, over 2 years, like single family homes are a pretty good inflation hedge. Bitcoin's performed better than single family homes in that time frame. But now we're stuck with this issue of, well, are single family homes an inflation hedge over a decade? And the challenge there is that as the price of homes go up, then there's an incentive for home builders to build more homes. So commodities, they have an appeal, but if you can produce more of a commodity, then if I increase the price by a factor of 10, I increase the incentive to build that thing by a factor of 10. So silver, gold, lumber, oil, homes, real estate in general, they're all subject to supply-demand elasticity. And when the demand increases, the supply is going to increase. The general strategy when you're staring at inflation is, I want to acquire scarce, desirable property that I can hold for a long period of time. If I'm going to hold it for a long period of time, that means I got to be able to afford to maintain it. If you buy a really nice beach house in Palm Beach, you find that you have a 2% of your property tax. So in a decade, you have to come up with 20% of the purchase price to maintain it. Then you probably got to come up with another 1 or 2% per year to pay for wear and tear, hurricane insurance, electricity, repainting, whatever there might be. So if you take 4% a year of the purchase price, that means that you have to come up with 40% of the purchase price over a decade to maintain it. Bitcoin's not going to cost you 40% of its purchase price to hold it for a decade. So the maintenance cost on digital property is lower than the maintenance cost on physical property. The reason that we don't trust stocks as money over 100 years is because the board of directors and the CEO can change the supply of the stock. So Apple might be a good company, but if the CEO of Apple changes, the new CEO might double the supply of the stock. And so it doesn't necessarily make a good currency or a good money over the long term. So I think in short, commodities are increasing in price right now. Oil, wheat, soybeans, natural gas, all of those have surged in the past 12 months. you'd like to hold a commodity that you can hold forever, that it has a supply that is inelastic to the demand. It's kind of hard to dollar cost average into a skyscraper, right? I mean, the average person can't buy $387 a month worth of a skyscraper. So it doesn't quite work. You can't buy $200 a month worth of the New England Patriots either. So certain things that look like long-term trophy assets don't work for the average person. You can't stockpile oil for a decade either. I know, I thought about it, when oil got to $0 a barrel, there was a point when it was free. So why wouldn't you just go and get $1 billion worth of free oil, right? 1 billion barrels of it, because you would have made a fortune if you could have, but the average person can't stockpile oil. You couldn't take delivery of. So at the end of the day, the issue is most things you can buy are currency derivatives, and currency derivatives are correlated to the strength of the currency. All currencies are collapsing. International currencies much faster than the United States dollar, but the United States dollar is also collapsing. So I have to find property which is not correlated to currency. I need it to be scarce. I need it to be desirable. I need to be able to afford to hold it for a decade, maybe hold it for 20, 30, 40 years. And I want something that's globally desirable, and the ideal property is something that a person more affluent than me, more intelligent than me, will want from me in a decade. So the case for Bitcoin is it's scarce, desirable property. It's not a currency derivative. It's not a security. It's beyond the reach of a company, a nation state, an agency. You can hold it and you can give it to your children or your children's children. You can take custody of it and you don't have to trust a counterparty. And I think we can see, especially this month, the risk of counterparties is great. If you hold gold in a vault and you're Russia, your gold can be seized. If you have cash in a bank account in Argentina this week, your cash is locked up. If you had Bitcoin with a counterparty like Voyager or Celsius, they might very well block you from withdrawing it. So Bitcoin is desirable because it's portable, it's global, it's scarce, and you can duck a counterparty you don't trust. You can transfer it to a different counterparty, or you can take personal custody. And that's why it's a useful asset right now, and it ought to be part of people's portfolios.